Welcome to ForexTV.com. It's Wednesday, December 12th. I'm Remy Hookey with your New York Forex Market Buzz. In today's session, we're seeing plenty of volatility across the board in all the markets. Earlier today, the Fed Reserve and four other central banks, including the ECB, BOE, BOC, and SNB, announced a joint effort to inject liquidity into the global banking system. In New York afternoon trade in the FX market, Euro-dollar is trading at 146.95 as of 1:10 p.m. Eastern Time, and dollar-yen is around 112.05, while sterling dollar is at the 2.0460 level. Joining me this afternoon is Jamie Coleman, Managing Director of Thomson Financial's FX Hub. Good afternoon, Jamie.
Hi, Remy. Good to be with you again.
Thanks for joining us on this Wednesday afternoon. Well, in less than 24 hours after the FOMC rate decision, the market got quite a surprise this morning. And as a result, we're seeing U.S. equities as Treasury prices take quite a seesaw. It appears as though the market got the aggressive action from the Fed that they had anticipated be a day after the Fed cut. So, Jamie, tell us about the timing as well as the reasoning behind the coordinated central bank move.
Yeah, the timing was very curious. The market anticipated that the Fed would come to market yesterday with some hint that some plan like this was in the works. We had been looking for a 50 basis point cut in the discount rate, and the market was severely disappointed with the 25 basis point cut, especially since the statement that the Fed put out highlighted so many downside risks stemming from the credit crunch. So it was quite curious that they only gave us 25 basis points. And then to turn around, less than 24 hours later, and come out with this coordinated policy, though it was well conceived and certainly well received by the markets, it whipsawed the market to such an extent that it really calls into question the Fed's credibility. This is the second or third communications gaffe in the last couple months with the Fed. Back in September, I should say back at the end of October, when they eased, they then signaled to the market that they may be done for a while. A few weeks later, they then had to backtrack and acknowledge that the markets had tightened up considerably in terms of the credit crunch, signaling a relatively aggressive move to come in December, and then to only come with 25 basis points on the discount rate. All of that leads to real questions of the market is how does the Fed really grasp their communications role here, and are they listening to the markets? The market is telling them exactly what they're expecting, and for whatever reason, the Fed does not seem to be listening at the moment.
Well, Jamie, following the rate cut yesterday afternoon, we saw the U.S. dollar gain against the high yielders and the yen cross a sell-off. But in today's North American session, the yen breached the 112 level with a high of 112.47 and fell to 111.91 against the U.S. dollar. So for the yen, what price action do you forecast?
It's had a very difficult time getting above this 112.50 level in dollar yen. There has been talk of barrier options at that level as well. There's also talk of Japanese corporate selling, exporter selling on the rallies. The fact that we've come up from sort of the 109 area relatively quickly over the last couple of weeks, I think some Japanese corporates are very pleased to be able to sell dollars on a 112.50 sort of handle, as opposed to at more distressed levels for the dollar. So I think they're quite happy to sell into strength at this point. And I think we're going to see relative stability for dollar yen, but quite whippy trading between, say, the 110.50 area and 112. I mean, we've taken out all the orders in between, and the yen really is acting as a risk barometer at this stage. Anything that comes out that's positive for the financial markets, positive for the equity markets, they sell yen immediately. The minute the stock market rallies start to fade, then they immediately buy the yen back. So, I mean, that seems to be the one and only trade that's going on right now. Those same trades are reflected against all the high yielders. Aussie yen has been extremely reactive to what's going on in the equity markets. Sterling yen similarly. So we're seeing almost one-for-one moves between the U.S. equity market and the yen at this stage.
And speaking of whippy trading, let's take a look at euro dollar as well as sterling dollar. We've been seeing exaggerated movements in the major pairs. So from both the fundamental and technical perspective, What will weigh on price action for euro dollar and sterling dollar?
Euro dollar, I think right now we are assuming that oil prices stay bid. It's going to be difficult for euro dollar to go tremendously lower. There seems to be very good support now around the 146.40 area. We bounced off that a couple times in the last two sessions. Similarly, there's resistance around 147.50 that we've had a difficult time taking out. So right now we seem to be swinging back and forth again, largely influenced by the U.S. equity markets. If we see a rise in risk aversion, perhaps we can see a shot to the downside through the 146.40 area. But I think it's going to be difficult given that oil is back, in the 93.50 area. The higher oil goes, Russia and the Middle East tend to diversify reserves, which oftentimes puts a floor under euro dollar on dips. So especially with thin holiday markets, that sort of buying could really limit the downside near term. Similar story in cable. A couple times we peaked above the 205 level in the last few days. It's having trouble holding gains up there, so it's kind of, that one has been even whippier than euro dollar. So barring any really unusual news events in the next couple days, I think we're bound to see something along the lines of 202.5 to 205, 205 and a quarter, something like that.
Okay, and last but not least, before we wrap it up, looking at the coming session, we do have the SMB announcing their rate announcement tomorrow. Market expectations call for a steady rate decision. So ahead of the SMB, what levels of support and resistance do you see for the Swissy against the U.S. currency?
To be honest, I don't have the dollar Swiss in front of me, so I really can't comment on that one. But just in general, in terms of Swiss, the Swiss franc has been moving really in concert with yen of late. It too is acting as a risk barometer. As equities strengthen, they tend to sell Swiss and vice versa. So that has really been probably a bigger impact on the Swiss franc than economics, interest rates, or anything else at this stage of the game.
Okay, Jamie, as always, thank you very much for your insight and analysis.
Anytime.
That wraps it up for Forex Market Buzz with Jamie Coleman, Managing Editor of Thomson Financial's FX Hub. I'm Remy Hoki. Join us later this afternoon for PM Exchange right here on ForexTV.com.